Good morning, everyone. This is Charalambos Pissouros, senior analyst at IronFX, bringing you the morning comment for the 21st of March. Emmanuel Macron, a centrist politician and former economy minister, was seen as the winner of the first French presidential debate. According to a Snap opinion poll, Macron was more convincing than his four rivals. Market participants may have interpreted this as diminishing Le Pen's chances to win, which propelled the euro higher after the debate ended. The poll also showed that the second most convincing candidate was Mélenchon, with Fillon and Le Pen tied for third place. According to the debate poll, Le Pen could even fail to make it to the second voting round, which suggests that political risks may be receding in the Eurozone. As such, we think that the near-term path for the euro is to the upside. Euro-yen rebounded from 120.70 in the aftermath of the debate, and during the early European morning Tuesday, it looks to be headed for the 121.45 resistance zone. Although the structure on the 4-hour chart still suggests a short-term downtrend, the positive sentiment towards the common currency could result in more upside extensions at least today. A decisive break above 121.45 is likely to open the way for our next resistance of 122.25, marked by the peak of the 17th of March. The case for further euro gains is also amplified by the increased market attention towards the prospect of ECB normalization. The latest signals from the bank suggest that there is diminished willingness among the governing council for any more extraordinary easing measures. However, in order to assume that the medium-term outlook of euro-yen has turned back positive, we would like to see a decisive close above the downside resistance line taken from the peak of the 14th of December and the 123.50 area. The main risk to our euro-positive view is incoming French polls showing Le Pen gaining back ground despite her seemingly poor performance in this debate. In such a case, euro-yen gains are likely to remain limited below the aforementioned downside resistance line. Now moving to the UK, according to recent media reports, the government is set to trigger Article 50 of the Lisbon Treaty and commence the formal process of leaving the EU on Wednesday, the 29th of March. The office of the Prime Minister also expressed its desire for the negotiations to begin at the earliest after the triggering. Even though the UK's intent to invoke Article 50 before the end of March had been signalled multiple times and should not have come as a surprise to investors, the pound still came under selling pressure on the news. In our view, once the negotiations begin, the forthcoming direction of sterling will likely be decided by media headlines regarding what each side is actually pursuing. Having said that, considering that much of the hard Brexit rhetoric may already be priced into the battered pound, we believe that the political risks surrounding the currency are likely asymmetrical. Any positive developments during the negotiation process could generate a bigger upside reaction than the corresponding downside in case of the anticipated hard Brexit stance. Besides the political developments, today's inflation data may prove critical for sterling as well. The forecast is for both the headline and the core rates to have risen, something supported by the UK services PMI for the month, which showed that rapidly rising input costs led to the largest increase in prices charged by service providers for 8.5 years. At the latest Bank of England gathering, some members noted that they would consider reducing stimulus should there be any further upside news on the prospects for growth or inflation, while Christine Forbes actually voted for an immediate hike. This suggests that in case the CPIs accelerate further as expected, then in addition to the Brexit negotiations, another big market theme for GBP traders is likely to be whether the Bank of England will reduce its asset purchases or even hike rates at some point in the foreseeable future. Such speculation could bring the pound under renewed buying interest. GBP USD is currently trading between the support of 123.40 and the downside resistance line drawn from the peak of the 2nd of February. Accelerating CPIs could prove the catalyst for a clear break above the aforementioned downside line and the 124.20 resistance, something that could pave the way for the 124.70 hurdle. As for the speakers, we have three on the agenda: Bank of England Governor Mark Carney, New York Fed President William Dudley, and Kansas Fed President Esther George. Any comments on monetary policy from Governor Carney may be of special interest to investors, as he will be speaking shortly after the release of the inflation data. For more information, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.